questions from my listeners who themselves are far from being financial titans of Wall Street or having, say, the economic opportunities for saving and investment that you have, who are sort of in the lower classes or the middle classes, and they're economically aware enough to know that things are going to get significantly problematic, to say the least. And they don't have the excess capital to, as you say, move money into other currencies and back. And sometimes it's really difficult. I live in Canada, and I tried to buy gold, and it was as if I went to the bank and asked for a big bag of crack cocaine. It's really, really hard to get your hands on it and to store it. What would you suggest for people who don't have a lot of excess income? What would you suggest that they do to prepare for the worst case scenario, which I think you and I would probably both agree is on its way?
Well, I mean, I think that in the worst case scenario, obviously you need an accumulated pool of savings. So if you lose your job or if economic conditions become very tough, you have a nest egg where you could live for 2 or 3 years without suffering too badly. The question is obviously, how do you invest that money? I think we really don't know how this great reflation will play out. That we don't know for sure. But I would suggest that people have some physical gold, in other words, gold coins, and you can buy gold coins also in the United States. There are shops and there are organizations that sell it, or you could buy a gold ETF. In my opinion, not an ideal vehicle, but let's say it's an adequate vehicle. I would rather buy a gold ETF in Canada, and you could also buy some gold miners. I don't think that the gold mining companies are terribly expensive, but whatever you do, and this is where individuals frequently go totally wrong. They get suddenly an attack with an idea one morning or one evening, and they put all their money into something at the same time without any diversification. And I can assure you, having been in this business since 1970, nobody gets his timing perfectly right. You can get your timing right for 10 years or 12 years or possibly even in for over 100 years, but very few people do that. And so I would argue that whatever you do, say we decide to buy some gold, it's not a question to buy the gold today or tomorrow or in 1 month's time. It's a question that you should buy every month a little bit for the next few years. And if it goes down, you should be actually happy, because a declining gold price would signal that the monetary system is healing. I mean, people don't realize that. They always want gold to go up, but basically gold is an insurance. If it goes up, it signals that something is not right.
Right. We're better off with sound fiat currency and lower gold prices than we would be with higher gold prices and an unsound fiat currency.
Yes, absolutely, unless you have 100% of your money in gold. But I don't know anyone who really has. I know some people, they may have 30% of their money in gold. But I mean, very few. I go to a lot of seminars and I give presentations, and then usually I ask the audience, how many of you own gold or gold shares? I mean, physical gold, maybe if there's an audience of, I don't know, 2, 3, 500 people, maybe 3% will own physical gold.
Right.
And with the gold shares, it's usually about 5%. It's not widely owned.